Hello trade pros and welcome to this weekend's video. In this video we're going to talk about how you can use the US dollar index, also known as ticker symbol DXY, to ascertain whether you've got opportunity in the US major crosses for the week ahead. So let's get at it. All right, guys, so what you see in front of you right now is the US dollar index. This is the weekly time frame. And before we go into how to kind of use this index, or rather this basket, to get potential trade ideas for the following week, what we're going to do is do a little breakdown on what the DXY actually is. So the US dollar index, it's simply an index or measure of the value of the US dollar relative to a basket of foreign currencies. And these currencies, there are 7 of them in total. They are the euro, the Japanese yen, the British sterling pound, the Canadian dollar, the Swedish krona, and the Swiss franc. Now within the actual basket, these currencies hold different weightings. The largest weight is against the euro, which is around 57.6% of the index in itself. The Japanese yen holds around 13.6%, sterling pound around 11.9%, Canadian dollar 9.1%, Swedish krona 4.2%, and the Swiss franc is 3.6%. So right away, what you guys should understand is that while this is not perfect, it gives us a good idea of what the US dollar is looking like across the board. Although it only covers 7 currencies, these are some of the majors that are weighted against the US dollar. And if we can see a potential bearish week lining up on the DXY, that will likely give you some opportunities to find longs on the majors and vice versa. If the DXY is in a level of support, what you'd likely be doing is looking to short the weakest major against it so that you can get the best opportunity, best volatility, and the best actual directional movement. So that being said, let's take a look at the current dollar index, and we'll just walk you through an example of what we saw over the weekend, why we were kind of leaning towards a bearish dollar on the week, and show you a trade opportunity on the US dollar, Canadian dollar, that you could have come to the conclusion with based on analyzing this US dollar index. So let's go ahead and get started. What you'll see right away is we've got a nice zone marked out here. These 97.71s are your 2018 high. This was a massive level on the dollar index. You can see for a majority of Q3 2018 and leading into Q1, Q2 of 2019, you've been seeing a lot of resistance around this level. The sellers are really defending this, and you can see that we had a couple of presses back down into the 95s, and from there each press kind of formed a higher low. Last time came into these 85s, bounced higher. This previous week we had a support hold at these 95.86s, and last week's candle shot back up right back into our overall resistance. All right, so we had this candle close on the weekly time frame, and because it was back up at resistance, we're kind of looking for potential moves back into here above the previous week's highs to fail in order to get this thing showing some weakness. So if we drop down to the daily time frame, what you'll see here is that we identified the previous swing high, which is right around that level there. We took the low of that wick, and we also took kind of the close of that candle as our range within the actual range here. And what we were saying last week was, we closed up top and we are looking for a press back out of there. So you see this week we had one bullish day, 2 bullish days right into our zone. And then on Wednesday, we had Fed Powell testify in front of Capitol Hill. And as a result of that, we kind of saw the dollar sell off. So this wasn't unexpected. This is something that we were looking for. And breaking down to the 4-hour time frame again, you can see that we had a nice little buy stop run into here. Bit of market structure formed, a little fake breakout right in that zone before we rolled over. So ultimately, we're just looking for the market to return to that zone, return to that consolidation, and see if we can get another press lower, which is what we're having right now. So based on that, we are looking at some pairs to get short if the dollar can give us that sign of weakness, and that pair in itself was the US dollar Canadian. So let's scroll over to that chart and show you guys exactly what we're talking about. All right, trade pros, so here we are with the chart of the US dollar Canadian pair, and this is the weekly time frame. And the first thing that you'll notice here is that we are right at the 2019 lows. You can see those lows came in just below 1.31. So what you saw last week was a bit of a bounce from these lows, came right back into our previous low right here. You see this big weekly low came in. That was a support zone. We opened back up and close back below it. So a rotation back into there would give us an idea that we might have some sellers coming in. So overall, you know, we are quite bearish on this front. Last week we had a bit of a move up, which gave us some market structure in this pair. If you drop down to the daily time frame, what you will see is that we kind of came down into the zone. We had a couple of bounces, and last Friday we had the press up into that zone. And you can see here a nice little wick that shows these buyers that came in here. The sellers absorbed all that buying and pressed us back down into the lower end of the range. So in here, we basically had a small channel between these 30 1.307s and the 1.3152s. And that was kind of the range that we were looking for. If I drop it back down to the 4-hour time frame, you can see this was kind of the zone that led to that breakdown. We had another rotation up, and we had another breakdown from there, another rotation up, and you can see a little wick, another rotation out from there. So this was obviously a little channel starting to form, and because we were bearish on the DXY, you know, coming into Wednesday, we were looking for a move back up into these previous highs, right into that range high, and that's exactly what we got. We got a press up, and you can see we had 1, 2, 3, 4, almost 4 dojis showing you that there was selling coming in, and that's where we caught it. You know, there was a press down lower, another rip up higher, right back into that zone, and ultimately it came right back down into that support structure, right into that demand, and that's kind of where we're seeing some buying coming in. So that in itself is an example of how you can use the US dollar index, the DXY, to ascertain some good trade opportunities for the coming week. In this case, we were bearish on the DXY up into those 2018 highs, and based on that, we were liking a move back up into structure highs here on the US dollar CAD, and from there we're just looking to target a move back down to the lower end of the range. Doesn't hurt that crude oil also caught a bit of a bid, which gave us a little bit more strength on the Canadian dollar as well. So all of those factors lined up and offered a great trade, and that was essentially, we started the process on the DXY, and then we found the pair that we thought was going to move the most based on the current factors, and this is what we got here with the US dollar Canadian. So I hope you guys enjoyed that little breakdown. I hope you guys will start using the DXY in your Forex analysis to help you guys find better potential trades, especially against the majors, since they are weighed against the US dollar. That being said, if you enjoyed this video, make sure to let us know by liking, by commenting, and by subscribing to the channel and clicking that notification bell so that you get notified every time we do go live. You don't want to miss those. And until next time, good luck and good trading. This is Mark from TRADEPRO Academy signing out. Take care, guys.